Well, good morning and welcome to the Locking Your Success Trade and Market Update for March 31st, 2014. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please note that we do use hypothetical computer simulated trades, which are believed to be accurately represented as possible. However, there are times when actual results may vary. If you're watching this on YouTube or on SMB or some other website, please come on over to our website, lockingyoursuccess.com. Check out our programs at the M3, the Bearish Butterfly, the ROCK, group coaching, and triangle coaching programs out there. And join our mailing list, get the free report, 7 Secrets to Becoming a Successful Trader, and sign up for the weekly webinar. Also, if you can stay tuned for our programs in development, and the M21 should be out in a couple of weeks, so I'm really excited for that. Okay, let's take a look at what's been going on in the markets. If you remember last week, we basically said that I expected the Russell to kind of stay in a sideways range somewhere between the 1145 and the 1220 area. We got just a pull down to the bottom end of the range, which basically is completely normal. From here, I would tend to expect that the market continue to be in a sideways range, at least for the week, probably for the month. I'm thinking we expire somewhere closer to the top end of the range, but I'm expecting a sideways range. What's going to change our mind here? Probably a breakdown under maybe 1150 or so. We have this trend line that should act as support. If we get a little bit further of a breakdown, we start breaking into that, and then we're probably coming down to a 1075. I don't think that's going to happen. I'm fairly certain that we're going to stay here. I also don't think we're going to pop any higher for the next month or so. That may change as time goes along, but right now I just anticipate that we remain relatively sideways. Like I said, we do have a long-term topping pattern. Once we get through with this sideways consolidation, I would expect to shoot up to about 1350 in the following couple of months, and then for the market to run sideways again for a while before some sort of a significant down move. But that's long-term. Short-term, I would expect this sideways move to continue. The SPX, same thing here. We have a very tight sideways range in the SPX. And I do expect this to stay more or less in a tight sideways range also. First indication that we may go higher on the Russell, of course, is if we get some sort of a breakout on the SPX while the Russell is near the top of its range. If the Russell's in the center of its range and we get a breakout in the SPX, I'm not that concerned. I'm thinking that if that's the case, that just is going to push the Russell to the higher end of its range. But if we start pushing up near the top of the Russell's range and this breaks out, then that's going to be possibly an issue that we're going higher. The Dow, again, nice tight sideways range here, and the NASDAQ looks an awful lot like the Russell. It broke down out of its tight range like the Russell did, but it's still kind of in its wider range between its more primary support and more primary resistance levels. And, as far as that goes, everything's acting normally, everything's in sync here, so I don't really see any issues. And like I said, we start seeing multiple indices break out of one of their levels here, then that's a sign. If only one breaks out, I wouldn't be overly concerned about it. And that's pretty much all I have for the markets. Unless there's any questions, it's pretty straightforward and not too exciting right now. As far as the positions go, I did close out the April Bearish Butterfly on Friday, and I did it because of the 21-day to expiration guidelines where we can exit the trade at a reduced profit target. In actuality, we were very close to our normal profit target anyway. It's closed out for around 14.5 to 14.8. I don't remember the exact number, but it's approximately 28.5% gain for the month, and it was a pretty simple month at that, so that went very well, and that one's in the books. Let's see, what else do we have open? The April M3 was a little bit more active because we had the market kind of backed off on us. So if I go back to Monday here, and we take a look at the way we looked, we were looking something like this. Starting to get a bit of a sag up here, but not that concerned because we're so deep into the tent. Let's see, what day did we come back here? I think I held this position until Wednesday. Take a look at our T-logs here. Yeah, 26th on Wednesday. And the market backed off some more. And if we go to the end of Wednesday, we were having too much positive delta here. So I added, in the process of starting to roll back from 1160 to 1140, right? And this is kind of how we would do something like this live. Rather than picking up all the butterflies at once and rolling them, a lot of times I'm going to start scaling into the 1140s and then, then start scaling out of these 1160s. So I added two mid-afternoon, I believe, and then right at the end of the day, I put in another two of the, I added one and I put in another two of these right at the end of the day to kick our delta down to, I think at the time, it was around positive 50 or, yeah, positive 88. So I just kind of kept it under 100 as per guidelines. And here's what the position would have looked like at that point. Again, it creates an issue up here. Not that concerned about that when I'm this deep in the tent, but certainly if the market started to bounce, I would start to straighten this out. This was a fairly aggressive moving day, so I didn't try to pull anything off of the 1160 level at this point. All I did is I added those three, and then the following day I rolled everything back. So if you come to the end of Thursday, I essentially came in here through a series of doing condor orders and rolling stuff back, and I'll show you the T-log if you want to look at that. Starting the 27th here, adding some more butterflies at the 1140, and then doing condor orders to get everything else rolled back to where I want it to. And essentially, I ended up at what would be similar to 10 1140 butterflies with 5 1140, 1150 vertical spreads. And the call just kind of stayed in the same place. That gives us a delta of positive 21 at that point. And if you look at the analyzed graph, we just kind of rolled back to here. And bit of a gamma trend problem again, but I'm not that concerned because we're still fairly deep in the tent here. And let's see, that was all there was. So if we come up to Friday afternoon, here is what the position looked like. We're still slightly positive delta. We are up about $3,000, which is a little bit more than halfway to the profit target. And this is how the position looks. If the market decides to drop back under my shorts, we will start rolling back some more of these. If the market takes off, then we'll take off this upside risk as we get to the edge of the tent here. On Friday, we were up intraday like 15 points. So if Friday had actually closed up here, we would have added some more verticals in here to flatten this out. But since it pulled back towards the end of the day, then nothing happened. And let's see, that is what happened with the April M3 trade. We also had an April ROCK trade, which was in a very similar position. We had, if we go back to Monday, it was I think it was 20 points higher with the strikes. We're all the way up here at the 1170 strike. If we analyze this, we look like this. And Wednesday, as the market came down, I believe right at the end of the day here, I just took this position and I rolled back to 1150. So I bought the 10 and then sold the 10. So what you do is you buy these first to straighten out your delta because the market was coming down fairly hard. You buy these first and then you sell these. Then you sell the 1170s. Buy the 1150s, sell the 1170s. We got a continued down move on Thursday. And by the end of Thursday, we came down from 1150 all the way to 1130. And this is T-log in there. We also moved these calls, which were a little bit higher earlier in the week. Let's see what they were at. They were at 1150. when the market pulled back so far, these lost all their delta, they gained a lot of time value, and they weren't being terribly effective. So I took these and put these all the way back down. If you look at by the end of Thursday, from 11.50 all the way down to 11.20. And the new position essentially looks like this, which it looks almost identical to the way it did before, except we rolled back further. And by Friday, there were no further adjustments here. And it just looks like this. So everything is fine here as well. And it's not up as much as our M3 trade is. However, it is doing just fine. It's part of the reason is because it was entered a little bit later, and we entered a little bit higher price level. So it took a little more maintenance here to keep this thing going. So those are the 2 April trades that are open. And then we also have the April V Condor, which I did end up pulling out the straddle. So if we look at this earlier in the week, we're something like this. Of course, during the week, the market pulled down into the V here. Very little theta at that point, and realistically, if we sit here too long in the center, I'm going to end up not going to make any money here, and eventually we'll end up taking a $2,500 loss. So to deal with that by Friday, we just pulled the V out. I'm not terribly concerned about hitting either of these short strikes at 1240 or at 1050 at this point, because we're a little too close to expiration for that to happen. It's certainly possible, but it would be very unlikely. So if we take a look at our analyzed graph, at the end of Friday, it looks something like this. Position sitting at about break even. This should decay very, very quickly and hopefully end up in a small profit. Not a banner month for the trade, but it's getting a little bit choppy for the V trade, but certainly it's doing fine. And let's see, we got that's it for April. We also have a May bearish butterfly trade going on. And this pulled back quite nicely after the trade was initiated, and it's currently up about $5,100. There have been absolutely no adjustments here. And this is what we're looking like at this point. So if the market does hold this range for April, this will be a very nice looking trade by expiration in April. And then from that point, if we are still in this tight range, we would want to start taking some sort of, there's nothing by guidelines to do this, but in reality you would want to start taking some sort of measures to protect your profits, because at this point by expiration, if we do hold the range, this will probably be up $7,000 to $10,000, and basically we want to hold on to that. But we'll see how this goes. Right now everything is looking just fine. Also, we have a Mavey Condor on, which is essentially looking like this. Let me just back this out a little bit. So we've backed into here. I don't believe there's been any adjustments to this. Nope. We've just we put this on. There's been no adjustments. And like I said, if we bounce back and forth in here, this trade will be fine also. We'll gradually start raising this V out if we don't move anywhere later on, but I'm certainly not concerned about that yet. It's a little bit too early. And this is looking quite nice. Also, I did add a trade. I added the M3 for May. I thought it was a nice looking entry point graph for this, so I went ahead and I believe it was on the 27th, which I believe is Thursday. Came in here and we bought 10 1120 butterflies and one 1100 call for a position that currently looks like, let's show you this on the analyzed graph. We're pretty flat delta here and basically at break even. And the position looks like this. This is the thing when we get into a little bit higher volatility. The volatility's up, and as we mentioned earlier, when we entered the ROCK trade, the skews in the market that, or the delta skews that are present in a market that everybody thinks the market's going up, have gone away, which is essentially telling me that confidence level is no longer there, that the market is going to continue to go higher, at least for the short term. And not only does that make for M3 entries in the ROCK trade, but it also makes for very nice M3 entries on anything that's longer than say 35, 40 days to expiration. So this is just a really beautiful entry, and you see how nice and flat your T+0 lines get and how safe this trade becomes in a higher volatility environment. So I'm just saying that because I really, really like the setup this month. We'll see how it goes, but it's a very nice setup. All right, and that is everything that I have as far as our positions. Like I said, the April Bearish Butterfly is in the books. I think it would have been safe to stay in that trade for a longer time and could probably pull a really, really nice month out of that if the market behaves. But like I said, those are the guidelines, so we popped out of the guidelines. Are there any questions that anybody has on any of the positions or any kind of a market question? All right, it doesn't look like we have any questions here. One of the things that I do want to mention is during expiration this month, we do expire some of these trades, and hopefully all you know by now, especially if you're expiring trades, that the Russell or the SPX, either one of them does not expire they don't expire Thursday afternoon, they expire Friday morning, and they don't expire using the value of the index. So if the market closes at 1150, for example, or Russell closes at 1150 and it opens up at 1155 on Friday, the settlement value isn't 1150, nor is it necessarily 1155. It's something on the RLS. So actually, if we go do a real life example here, let's see, expiration day was actually the 20. Let me see here. I'm going to look at my calendar quickly. Our actual expiration date was, drum roll please, not the 27th, but the 20th. So our actual expiration date here was the 20th of March. And we closed, well, that was the Thursday. And the 20th, we closed at 1198.97. We opened up at 1203. Neither one of those is necessarily the settlement value. The settlement value is determined on the opening prices or prints of all of the 2,000 stocks that are within the Russell 2000. So, and that value is going to be on the RLS. And if you look at the RLS on the 21st, which is the morning of the opening, we actually had a value of 1205.14. So we settled in at 1205.14, and we had that's pretty close. Now, the SPX, however, if we look at that, this settled in at, on 320, we closed at 1872. We opened at 1874, so 1872 to 1874. The settlement value on the SPX is the set. The 21st on the set was, I know there was a decent gap here. It's up here. So the expiration value, or settlement value, was 1893 on the SPX, and the opening value on here was 1874. So that was a pretty big gap. So 1874 to 1893. So that was a 74 to 93 is almost 20 points, almost a 20-point difference in the settlement value off of that, which is very unusual for the SPX, but it does happen sometimes. And similar things happen to the Russell, too, on settlement. So actually, they happen every day when they settle. However, one of the things just to realize is that can happen. So you don't want to come in here Thursday afternoon thinking that you're going to expire at the price you're at, and you don't want to be there Friday morning thinking that you the settlements necessarily at the price that the market opened. You actually have to wait until the settlement value comes in, which is sometimes 10, 11, 12 o'clock in the morning before you get your actual value. So that's just an important lesson. And don't count your chickens before they hatch, type of a thing. Wait for the settlement value so you know what you got, and also leave enough room. Just so you have an idea, the difference between Thursday close and settlement value on the Russell is, on average, because most of us do the Russell, is 1.1%. So expect a 1.1% move either way, and make sure you have that room. The most that's ever happened is a little over 4%, which was kind of an anomaly. That would really, really ever happen. Oftentimes it's between 1 and 2%. So just keep that in mind. All right. And so here's some questions here. Any further update on the M21 release? No, as far as I know, we're shooting for the second week in April, and as fast as they get that done, they're not getting the videos to me fast enough for me to get them reviewed. I have 4 of them reviewed now. I have another 4 I have to review, and then we'll be putting it together and the launch together, and we'll go ahead. Yeah, April 17th is probably a reasonable date for the launch, and that's what we're hoping for. It's going to be on Tuesday on the options drive, more than likely. So probably the 3rd Tuesday of the month would be my guess. All right, do I think the pullback in the rut was deep enough for another big upside run? Yeah, it's deep enough for another big upside run, but I don't think it's going to happen. I think we're going to run it sideways. Okay, another question is, okay, yeah, an announcement was not set out for the meeting. So if some of you didn't get the meeting link, I apologize for that. I know some of you are off the old link. I'm going to see if I can find out what happened with that. I didn't. I actually did get an announcement for it. I don't know why some people did not. If you didn't get an announcement, please let me know, or actually try first to re-register. If you can't re-register, just please let me know. It looks like I'm managing the M3 and the ROCK trades the same. Yes, I am going to manage them the same unless the market goes up. If the market goes up a lot, the ROCK trade gets flipped over into a ROCK position, and then it gets more aggressive. And the M3 position will not do that. It's going to stay there. If the market does stay down, they will be pretty much managed the same throughout the trade. The ROCK trade, and just so you know, I don't know if you've been watching the trades or if you don't have the program, the ROCK trade does not always start out as an M3. There is an entry test to the ROCK trade, and if certain conditions apply, it will start out as an M3. If other conditions don't apply, then it will not. Another question is, okay, yeah, okay, another question on the ROCK trade. Regarding the ROCK trade, do I think we may stay in the M3 mode for the remainder of the trade? That depends completely on what the market does. If the market takes off to the upside, then no. If the market doesn't do that, then yes, we will stay in that position. Let's see, another one. The current market conditions are such to not re-enter the ROCK M3 into a normal ROCK, right? Yeah. I mean, you're not going to change into a normal ROCK trade unless the market actually goes up. If you were going to enter today, you'd have to do the entry test again, but I wouldn't have an issue with staying in an M3. It's a decent trade for the month. And how would I protect profits on a single bearish butterfly if we stay in a tight range? I would basically protect profits by using a delta limit similar to, and I wouldn't do this until we get closer to expiration, but holding a delta limit similar to an M3. So if the market started to creep up and we're in a single bearish butterfly and we kind of want to break guidelines and go into a profit protection mode, then instead of using the really liberal delta guidelines that we use in a bearish butterfly, and instead of scaling in at this point, all we do is we decide that we're going to stay here. We're going to bring our delta guidelines down to what an M3 delta would be. So at like minus 100, you'd be starting to adjust out and starting to flatten out your T+0 line. So as the market goes up, you'd start adding calls into the position and then verticals, and then just kind of, if the market takes off, just let it go. So that's basically what you would do. And then to the downside, if you had to roll back, I'd roll back. Again, using a little bit easier delta guidelines, I'd roll back into an M3 because M3s protect profits really well. So go into that, and then plus you have the ability to make another 5 or 10% in the trade. So that's what I would do in that case. And I believe that is all the questions that we have. And we're about 9:30, so we're about time limit as well. I hope that was great for everybody. It was great for me. And have an awesome week, and we'll talk next week. Thanks and goodbye.